Today, we will talk about the International Monetary Fund, IMF. The International Monetary Fund is an international organization that promotes global economic growth and financial stability, encourages international trade, and reduces poverty. Quotas of member countries are a key determinant of the voting power in IMF decisions. Votes comprise one vote per 100,000 special drawing rights, SDR, of quota plus basic votes. SDRs are an international type of monetary reserve currency created by the IMF as a supplement to the existing money reserves of member countries. The International Monetary Fund is based in Washington, D.C. The organization is currently composed of 190 member countries, each of which has representation on the IMF's executive board in proportion to its financial importance. Quotas are a key determinant of the voting power in IMF decisions. Votes comprise one vote per SDR 100,000 of quota plus basic votes, same for all members. The IMF's website describes its mission as, to foster global monetary cooperation, secure financial stability, facilitate international trade, promote high employment and sustainable economic growth, and reduce poverty around the world. The IMF was originally created in 1945 as part of the Bretton Woods Agreement, which introduced a system of convertible currencies at fixed exchange rates. The IMF also acted as a gatekeeper, making countries members of the IMF a requirement for membership in the World Bank forerunner. Since the Bretton Woods system collapsed in the 1970s, the IMF has promoted floating exchange rates, where market forces determine the value of currencies relative to one another. The IMF's primary methods for achieving its goals are through surveillance, capacity building, and lending. The IMF collects data on national economies, international trade, and provides economic forecasts. It also provides technical assistance, training, and policy advice to member countries and makes loans to countries experiencing economic distress to prevent or mitigate financial crises. These loans are often conditional on recipients making reforms to increase their growth potential and financial stability. The IMF gets its money through quotas and subscriptions from its member countries, with the contributions based on the size of the country's economy. The U.S., with the world's largest economy, is the largest contributor. IMF grants are given to charities in Washington, D.C., and member countries to foster economic independence through education and economic development. The average grant size is $15,000. The International Monetary Fund primarily focuses on the stability of the global monetary system and monitoring the currencies of the world, while the World Bank aims to reduce poverty across the world and strengthen low- to middle-class populations. The IMF works to help reduce poverty, encourage trade, and promote financial stability and economic growth around the world. It accomplishes this by monitoring capacity building and providing loans. While the IMF is currently working on these goals with its 190 member nations, the organization has still faced criticism for the possible negative impacts of its structural adjustment programs. Here are 4 key takeaways. 1. The IMF's mission is to promote global economic growth and financial stability, encourage international trade, and reduce poverty around the world. 2. The IMF was originally created in 1945 as part of the Bretton Woods Agreement, which attempted to encourage international financial cooperation by introducing a system of convertible currencies at fixed exchange rates. 3. The IMF collects massive amounts of data on national economies, international trade, and the global economy in aggregate and provides economic forecasts. 4. One of the IMF's most important functions is to make loans to countries that are experiencing economic distress to prevent or mitigate financial crises. Hope this would help. Thanks for watching.